Julian, the dynamics of this price recovery, was it the dynamics of supply or the dynamics of demand?
I think, Tom, that it was probably a bit of both. We've certainly seen that the demand collapse seems to have bottomed out. The deepest year-on-year demand destruction seems to have been the early part of April worldwide. Demand is picking up, not yet very strongly and not yet everywhere. But we do seem to be coming back off the bottom. China is picking up very strongly, other parts of the world much less so. But we've also had a huge adjustment on the supply side. The OPEC Plus group of countries that met in April, they agreed an output cut of close to 10 million barrels a day between them. We've seen big market-related reductions in output from North America, particularly the US and Canada. We've seen reductions in places like Brazil, the UK, Norway, and elsewhere. And it's really the intersection of both of those that have first put a floor under prices and then powered this rebound. The worry that some have at the moment, though, is that it may have gone too far too fast.
Well, Julian, to that point of going too far, the higher prices go, the more production comes back online. We are hearing about this anecdotally from the U.S. shale patch. And now the OPEC Plus meeting that was planned for this week will likely be canceled because of concerns about quota cheating. How much is production picking up as some of these suppliers take a look at the higher prices?
Well, I think it is, as you say, at the moment, very much anecdotal evidence coming out of the U.S., a number of companies operating in the shale patch saying that they are starting to reactivate some of the wells that they shut down. People aren't yet talking about doing new drilling and new fracking. This is very much reactivating wells that were pumping and that were shut down in the depths of the crisis. So the rebound is likely to be relatively small, and it may still be offset by the natural decline in older or in wells that have been brought on stream in the shale patch in the last 3 or 4 months, where production rates will still be falling. Among the OPEC countries, the real stumbling block seems to be that the Saudis and the Russians, who have both made very, very deep output cuts, are angry at countries like Iraq and Nigeria that seem to have done much less than they had promised to do, and that is certainly causing disagreements within the group. They were due to, well, they still are due to meet next week. There was talk of bringing that meeting forward till tomorrow. As it stands right at this moment, when this meeting will be held is still far from certain.
Julian, just to build on Lisa's question, just how elastic is U.S. supply?
I think it's probably less elastic than a lot of people tend to think. Certainly wells can be shut in and restarted as we're seeing, but I think it takes more of an increase in prices than we've had already before people start looking at drilling new wells or spending the money to fracture wells that have already been drilled but not brought into production. Certainly it's much more elastic than, for example, bringing on a new oil field in the deep waters off West Africa, which, you know, can take 5 years from discovery to first production. But even so, I think we are looking at perhaps another $20 a barrel on prices before we start to see a real uptick in drilling in the shale patch, and that may well be a way off still.